Hello guys, on today's video, I'll be discussing about the trend reversal confluence checklist. This checklist you have to be looking out for before a trend will start reversing. So if a trend starts reversing, it will definitely give you this checklist I'm going to be giving you. The seven checklists, at least if you're able to master six out of seven. It's a high probability reversal. It's a high probability reversal. But if you're able to master 7 to 7, it's a very, very high probability reversal. If you see at least four reversal confluences, you need to wait for more because price is building. You understand? So stay tuned to this video is over. Like and share to your friends and subscribe to the channel as well. So the first confluences you have to be checking out for is your market. The first confluences you have to be looking out for is your market structure clue. So you should be looking out for your market structure clues. First of all, you'll be identifying major highs and major lows, swing that price in making the swing points, your higher highs, your higher lows, higher highs, your higher lows. These are your market structures. Your lower lows, your lower highs. These are an uptrend market structure for those of us that are new to trading and are not familiar with this. And then this is your downtrend structure price giving you this. This is a clue that price is actually giving you a downtrend structure. And a sideways structure price is neither going up, going down. This is a support and resistance traders setup. So you see price going this kind of uh neither breaking either the highs or the lows. Neither of those are being broken, so price is ranging inside the zone. So this is called a sideways trend. You see it. So this, first of all, it will give you a market. You get a market structure view, identifying the trend of the market if it's actually going up or going down. That one is the first clue, first checklist, reversal checklist that to be looking out for before price will start going. And the second you have to be looking out for is your zone of interest. Your zone of interest. Let me write it out. Second is your zone of interest. Where you're interested in buying, where this is where reversal happens, your supply and demand zones, your support and resistance zones, your OB, your fair value gaps. So these are the zones of interest where reversal happens. Reversal always happens at these zones, at your highs and at your lows as well. So reversal always happen at all these key zones. Then the third checklist you have to be looking out for is your liquidity factor. Your liquidity, your liquidity factor. So you should be looking out for your liquidity factors if price has actually given you if price have actually given you at your double bottom, at your double top, price created double top, if price have actually given you a liquidity sweep before price would actually give you a directions. So because before price will start giving you a reversal direction, it will first give you a liquidity sweep, sweeping up the double top that it have created or sweeping out the lows it have created before price will start going up. You know, price will create a low and then goes up and then try to approach on this low, but approach a bit lower, sweeping those ones that have entered early out their stop loss, and the what happen price will change direction taking at this highs, telling that price is now going to the upper side. Is it taking at this high? This is your reversal zones. So where are you actually? This is your reversal zone. So all you just have to do is to wait for price. As price have broken, you don't just enter immediately at this top. You wait for price to come back to this low because this low is acting as a uh, support zone to price. Same thing goes here. you mark out this low. You notice price approaching all the way to this particular key zone, and then before price will start heading back to the downside. Same thing goes here. You notice price will approach all the way to this zone, and then before price will start going to the upside. So these are your reversal confluence checklists you have to be looking out for. And the fourth you have to be looking out for is your candlestick, your candle and price action confirmations. You need to be looking out for your candle and price action confirmations. Let me delete all this so that the so that it won't occupy space. All right. Your fourth we are looking out for is our uh, we are looking out for is candle and price action confirmation. So you should be looking out for your candle and price action confirmation, which is your pin bar, your engulfing candlesticks, your morning star, evening star, doji, hammer, whatever candlestick confirmations you are looking out for. Those are what you should be paying attention at. Those your reversal key zones, because it's those your reversal key zones that you'll be paying attention. This is where this candlestick work perfectly. So if price approach at those key zones, then it will print you those candlestick confirmation telling you that price is actually changing direction from that particular key zones. It's no longer heading back to the downside. It's now trying to give you a break, a rejection, telling you that now the buyers are in the market. You can join the buyers and start riding the trend. So you need to confirm your price actions, which is your candlestick confirmations. All right. The fifth you should be looking out for is your multiple time frame alignment. The fifth you should be looking out for is your multiple time frame alignment. Your multiple time frame alignment. So you should be looking out for your multiple time frame alignment, checking out for your higher time frame for the overall view of the market, like your weekly, daily, 4 hours for the overall view of the market, the overall trend of the market. Then your 1 hour time frame, you are looking for your structure breaks, your lower time frame, which is your 15 minutes time frame, 5 minutes time frame. This is where you'll be taking out for your entry confirmations and then start riding trend. This is where you'll be looking out for all these your confirmations and start trading, because lower time frame so that your stop loss will be a bit lower and a bit tighter. All right. And the sixth you should be looking out for is your risk reward and entry logic. Risk reward. What risk reward do you risk? Risk, reward, and entry logic. Okay, sorry, let me write number six here so that six. Okay, risk, reward, and entry logic. So your risk reward, at least you should be taking off for you should be taking at least two risk reward or three risk reward depending on your risk reward. These are the high probability risk reward setups. At least two risk reward, three risk reward. Definitely price will get your TP before any change of direction. If price is not going that far, I use mostly on the two. You definitely see price going to your TP within some hours and then you are out. Mostly used by the day traders. These are mostly used by the day traders. So it will help you to calculate your risk. You are to risking in a day, your risk reward, and your entry confirmations. There's your buying where you are to enter a particular trade. Let's say you are taking entry after you confirm a liquidity sweep. Let's say this is a buying opportunity. Okay, let me They say this is a buying opportunity. You have confirmed your entry. After price has swept out, you confirm your entry, and price can give you a candlestick confirmation because price will retest the second time. And what happened? Price have already given you a trade. So what you have to do is to pick out your trades, taking your risk to risk reward ratio. The stop loss is always below the low that price is giving you. So at least a bit lower, and then taking risk reward. This is about two risk rewards to the next key high that price created. This is about okay, one to this okay, you are taking two risk reward to this high. So definitely you notice that price, because price will definitely approach all the way to this high. Price will have to smash your TP out. You notice price going up and then taking your TP out before any reversal happens. If price is trying to reverse at this key zone, by then it would have taken your TP out. If price is trying to reverse at this key zone, by then it would have taken your TP out before any change of character will happen or before any reversal will happen. See, that's why I like making use of that, the tourist reward ratio mostly. So you see it. So, and the last but not the least, which is your market content, you should be looking out for, checking out for your news. Should be checking out for your news because news cause a very high spark in the market. Seven. So you should be looking out for markets. Market contest, which is your news, checking out for news if news is going to happen because news always cause a very high spark in the market, causing rejections and your session timing, your London close, New York open. So this is when reversal happen mostly. News always cause reversal. Uh, your session timing during your London Open and New York's, sorry, during your London Close and New York Open. Those are when price always cause a reversal in the market. All right. So at least if you can be able to, if you can be able to see at least 6 to 7, in fact, 7 to 7 or 6 to 7 is a very high risk reward ratio. Just keep this confidence. These are strong trend reversal confidence checklists that to be looking out for before buying or before entering any reversal trade. If you are entering any reversal trade, make sure these checklists are being confirmed before you start entering any reversal trades. All right. So this is it, guys. Subscribe to the channel to get more of my tutorial videos. All right. Take care and bye for now. Don't forget to share to your friends and like as well.